Morning, everyone. Market's going to open in about 10 minutes. If you've been monitoring the futures overnight, you know that it's been very interesting. I mean, just to give it some perspective, we're coming off of a day where the Dow was down 1150. So the biggest point drop ever, I mean, the media loves to emphasize this was the biggest point drop ever, but in terms of percentage decline, it was not the worst day. There were days that were worse than the 2007-2008 financial crisis. Having said that, volatility is elevated. The VIX futures are down, but the volatility index is up. And it was looking last night, late last night, excuse me, like we were going to have another pretty hefty down day. But I don't think that's going to materialize because for all intents and purposes, right now it looks like the indices may very well march towards positive territory. It's hard to say. I mean, one second. If we look at just a summary of the futures here. Okay, so the Dow futures are down 211. The NASDAQ futures, they were positive at one point. They're now down 5. The S&P is down 12, which is 0.5%. The Russell 2000 futures are up. They're up 34 basis points, or 490. Let me remove this study here so we can kind of look at a clean chart. So the Dow futures anyway, closed the regular session at the 2 o'clock close at 24,284. So let me mark that level. So right there, okay. They traded down as low as 23,088. So almost 1,200 points from the close. I did see that they were down as much as 800. I saw it down 800 at one point in time. And it looks like they traded even further from that, below that, by the time I had looked at it, from 24,288 to 23,088. So that's about 1,200 points. Then they rallied. Actually, it wasn't late at night, but kind of mid-evening. Started to rally, in the 9 o'clock, 9:30 hour. And we're able to make it all the way up to this 24,126 level. So that's about, cutting about 1,100 points or so off of that that decline. But now we're trading down about 270, 278. It was looking, I mean, the Dow was only down 140 at one point in time. As we get closer to the open, though, it looks like it's deteriorating, the Dow futures. And actually, it looks like all of the futures are deteriorating as we get closer to that open. Okay, so that's, as we get closer to the open, you'll get more attention and more traders. So we'll just kind of see what happens. A little bit later this morning, I'm going to take a little bit of a longer term perspective. I'm going to take a look at I drew some charts last night. I did do a kind of a special edition, like market wrap yesterday evening at 8 o'clock Arizona time, so 10 o'clock Eastern. I had kind of done some chart drawings on the NASDAQ, the Dow, the Russell, and the S&P, and have a little bit of a different prognosis for each of those 4 indices. The nut of it is, or the net of it is, that I think that the Russell, and you can see it here in the futures, right? I think the Russell is about at that point where it's hit the bottom of its move, and it would be a good time to take a look at maybe taking a bite out of that, maybe putting on a position, gradually building into a position in the Russell 2000, which would be, like IWM, I traded IJR. These are not recommendations or endorsements. These are just, symbols that I know track the small cap index. Bell will open here in about 3 minutes and 15 seconds. I don't know if I am going to really trade the futures today, or at the very least, I don't think I'm going to trade them right at the open. I might give it 5 minutes or 5 to 15 minutes to kind of settle down a little bit, and then kind of tell us where it's going to go. Part of the reason why I want to do that is I was looking at the futures really early this morning at about 7 o'clock Eastern, so 5 o'clock my time or so. And the Dow futures were making huge moves. I mean, we're talking like 20 tick moves within the span of a second. So trading from, for example, like 23,670 all the way up to 23,690 at the snap of a finger. Last thing in the world I wanted to do was initiate a position and then 1 second later, see that I'm down, $100 already. Now, granted, it would recover. It would, as long as I get the direction right, and that basically happens anytime you initiate a position in the futures. Unless you pick that perfect moment, which is very difficult to do, it's going to trade against you temporarily. That's why you have stops in place. So if it just continues to trade against you and proves to you that you're wrong, you can get out. The only thing worse than being wrong is staying wrong, I've heard it said. And traders, for whatever reason, are stubborn and don't like to admit that they're wrong. And they'll ride a position even because despite the fact that they were wrong on it and that they're in this to make money, will ride a position until it hurts them so much that they have this huge hole that they need to dig themselves out of. It just doesn't make any sense. But it's human nature. It's emotion. When there's money involved, people get very emotional. And it doesn't make sense, but it's something that happens. And it's something that I've done myself. And trading, especially when you're starting out, is a learning experience. It's one of the most exciting and painful learning experiences all at the same time that you can probably ever have. Right now, you can see the mini Dow rallying. If you look at the indexes here, you can see the NASDAQ had declined. It was in positive territory. It's no longer. The Russell is still positive, but it's come down a bit. It was up 4.5, not 5 minutes ago. So the opening bell is going to ring in 5, 4, 3, 2, 1. Now, ding, ding, ding. So we're off to the races again today. It should be an interesting day. I'm just looking at my positions. Immediately, some of them have turned against me. Autodesk, simply because it's my long position. That was one that I was hesitant to take from a bullish position to a bearish position, because on Friday I knew what Monday was going to bring. And it helped me yesterday. I was tempted to either close it or do whatever it was I needed to do to transition it from a short to a long position. Which basically the only way I really could have done that. I mean, I bought this call spread, so the deltas on it, it's a positive delta. if I wanted to change this from a bullish position to a bearish position, I would have had to get those deltas negative, and the best way to do that would have been to either sell this completely and just buy puts, or to roll this short call spread to a lower call spread. Bring in more premium with the idea that Autodesk is going to go down, which right now it is. It's down $4. Okay. My Apple, Apple's down 70 cents, so that's helping. KSS is down down 254. That's helping a lot. VWO, that's probably a down. I mean, emerging markets down. It's only down 33 cents. So it should be helping my short call position. A lot of times these trade kind of funky, especially if there's wide spreads on them. I can understand my long call being down, but not my short call. If VWO is down 27 cents, that will hopefully correct itself sometime later today. Win down $2. And XLRE, that's another one that's been trading kind of funky. I don't know if it's down, or rather it's up 10 cents. So I guess it would make sense that this would be up. It doesn't make sense it would be up $100. I'm fully prepared. I mean, I'll put an order in and try and close it out and see if I can keep that $100, but I really doubt that's going to happen. Yeah, see, that's not even going to happen, because if I take a look at the depth, which is what the market is for this particular option. It's going to show me over here. Market depth, so it's 0 by 25. So basically, buyers are not willing to pay anything for it. Sellers are asking 25 cents. This is on like kind of the best offer basis. You can see like on the Amex, okay, the best ask is $5. So nobody's going to pay $5 for it. Nobody's going to pay $2 for it. Not when there's other exchanges that have an offer at 20, or have a bid, or rather an ask at 25. I could put it in for 10 cents. See what I get. Change this to a good to cancel, because honestly, if I get anything for it, I'll be happy. I had an Intel broken wing butterfly that I had put on in anticipation of earnings, and I was bearish on Intel going into earnings, and they rallied pretty hard, and so that position turned against me very quickly. I was actually able, so that would have been like a maximum $70 loss. I think I was able to probably maybe cut that loss down to 50 or 60. So I mean, we're not talking big numbers. I mean, 70 wouldn't have been that big a deal, but sometimes you put orders in just to see if you can get them filled. Orders that are advantageous to you in some way. So that's kind of what's going on here in my portfolio. I don't have a lot of positions on. I probably would like to have more, but I'm going to just wait and see what happens when the dust settles. So what's happening here in the Dow is that it is rallying to this peak that it set at 2 o'clock, 2:15 this morning. And we're going to see what happens when it hits that point. My guess is that based on the stochastics, because the stochastics are looking pretty positive right now, it's going to trade through that. higher there. Now that it's kind of pierced through it. The problem that I'm having right now is that my charts are not doing a good job of keeping up with the actual price action because there's so much volume. And this is exactly what I'm... Oh, I didn't mean to get... I've been doing that lately. I did not mean to flatten that position. So I'm hesitant to even trade because visually, I honestly cannot tell what this index... I mean, I can watch this here. But that's not as easy. So where do we sit right now? So the Dow is down 105. The NASDAQ 100 is up 370. The NASDAQ Composite is down 1389. The S&P is down $11, 11 points. The Russell 2000 is down 9.7. So the only one that's up right now is the NDX. Okay, futures across the board are green. So the indices in the cash market, they're all down. The futures are predicting a turnaround. Dollar stronger today. It's up 45 basis points. Gold's down. Gold had an up day yesterday. Not as big of an up day as I would have expected, though. What was interesting, gold is traditionally considered that safe haven asset. You know, when equities sell off, money will rotate into bonds, money will rotate into gold. Whenever there is bad headlines like North Korea missile launch, that has led to a spike in gold prices. What was interesting yesterday was that gold was up, but not that much. I mean, in a market where the Dow was down 6.5%, gold was up 50 basis points or 60 basis points, something like that. Now the dollar index was up as well, so that's going to temper some of that gold move. I mean, if the dollar was down, then that would have amplified the move up in gold. But still, I would have thought that from a safe haven fundamental standpoint, that whatever, to the degree that the dollar index was up, you know, gold should have been up in a way that outpaced that. I was expecting like a 2, 3, 4% move up in gold, and we did not see that. So what that kind of tells me, and the same thing with the other safe haven assets like the currencies, Japanese yen and Swiss franc are two that I look at. They were up as well, but not, you know, by about the same, less than 1%. You know, I would have expected big moves up in those currencies, and we just did not see it. So what that tells me is that the market is pricing in. When I say the market, I mean I'm talking like just markets overall. The gold market, the yen market in particular is what we're talking about. But I think that they're pricing in a fairly rapid recovery. I still think that we have some pain ahead. I mean, just because the NASDAQ and the NASDAQ 100 and the composite are up, you know, and the Dow, the S&P, and the Russell are off the lows of the day. I mean, just because VIX is down almost 21%, that does not mean to me that we're out of the woods yet. So I'm curious to see. Actually, let's change that to orange. If the issue affecting. So what's happening is this price is accurate where I have my cursor right now. The bubble, which tells you, which should be the same thing, is not keeping up to reflect it. It only updates like periodically. And it's something that we are also seeing in other, it's not just the futures. It looks to me like it's also like on Apple, for example, so it's also on equities. So that just makes it harder to trade when you can't trust your eyes. So then the best thing I can do literally in that case, you know, is wait till I have a crossover on the 4-minute chart. I'm not going to get these two to line up exactly. I mean, they're headed in the right direction, but that's difficult. And if I want to trade the futures, I'm just going to have to trust that the stochastics are telling me what I believe they're telling me. See, now in the futures, I mean, so the Dow futures are up 400 points now. The Dow cash market's up 50. So there is a difference of opinion. And that's not to say that the futures mirror the cash markets exactly, because they don't. There's always, I can't think of a time when I saw that they were trading exactly identically. There's always some spread between the two. But I have not seen a spread to this degree. This right now is a 320-point spread. I don't know if there's anything I can do like with my video card or something. So I'm going to take a, I'm going to take a break yet. I'm only 15 minutes in. But I do wonder if there's something I can do to help that paint better. Like I said, it's a known issue. so it's not my system, but there could be something I can do with my system to at least make it better. Alright. That should help my GPU utilization get it down to 0. Hard to say. I think it's improved somewhat. That, excuse me, at least makes it tradable, I think. Now I just have to pick my spot. So today is rally day. But I still see more pain ahead because this market is so oversold. From a lot of perspectives. Or I should say time frames. I mean, if I look at the 1 hour chart tells us that we're in rally mode. I get that, right? The 4 hour chart tells us we're in rally mode, okay? The daily chart tells us that we're improving. Like this is not as negative as it was. Like we've had these we've had down days overall, and now it's like it's starting to show some kind of a recovery. Traded all the way down here and then up here. If this closes this way at the end of the day, like this inverted, what do they call it, this hammer or inverted hammer, that's bear or bullish. And we would expect it to rally off of that. However, the week tells us that we just, from the standpoint of the full K, we just got out of oversold, or overbought rather. And the monthly tells us that as well. So whatever rally happens over the next, or today, over the next few days, will only be temporary. Because it doesn't change the fact, well, we'll see. If this bar closes below this low from the prior bar, because that was the bar that set the all-time high, if it closes down here, that's a bearish signal. And a lot of times, like I said, being able to project what you think these markets are going to do has a lot to do with looking at what the story of the charts is telling you, the technical indicators that you look at, the technical indicators that you rely upon. If you see a moving average crossover, that means, pot like this, that's a bullish signal. right? If this bar here closes above the 200 period, that's actually a 243. If it closes above that moving average, though, the odds tell you it's going to continue to trade through that. Now, this is a 4-minute chart, right? If this were a weekly chart, that would be a positive signal much longer term. All this tells me is that maybe I can get into a trade and in about 15 minutes I can close out for a nice profit. This is kind of a double bottom. I mean, not exactly. Usually a double bottom, they touch in a, you can draw a vertical line, or rather a horizontal line that shows that. But this one here is a trend line. An indication of the bullishness of this current move is that this is the trend line that we would have drawn. So it shows breaking up and closing above, which is a bullish signal. That plus the fact that we're seeing positively increasing histogram on the stochastic here on the 15-minute and here on the hour tells us that. This tells us that as well, but this also tells us, okay, from these short-term perspectives, we're overbought. So we don't want to initiate a new position right now. I want to wait till that full D comes back down here, not just the full K. The full K crosses down below the full D and it crosses down below the 80. That tells me, okay, it's time to start watching. But I'm not going to initiate a new position until I know that momentum has pulled the full D all the way down to this 20 mark. And it will likely have pulled it down on the 4-minute as well. I can't predict what that chart's going to look like, but I know in my mind how it's going to look when I decide, yeah, it's time to hit the sell or time to hit the buy button. Wow, Dow futures are up 675 points. So that's helping Autodesk, and that's it. So Nasdaq 100 is up 1.5%. Nasdaq Composite's up 1.25%. S&P is up 1.2% roughly. The Russell 2000 is up 0.75%, and the Dow Jones is up 1.5%. These are the cash markets. So the futures led the cash markets up. And if that pattern continues, this to me is a signal that the Dow cash market is going to continue to trade well north of that. And that volatility right now is getting crushed because it traded all the way up. It closed. The volatility of the VIX index, which is redundant, but the the volatility index closed yesterday at 37 and change. In the extended session, or the extended hours, it traded all the way up to 50. Okay, market opened today at 7:30, and it fell from 42. It's all the way down to 25. Right, that's a 34. It's saying a 34% decline. Now, one of the symbols I use to trade volatility is why. I was looking at it yesterday. I was looking at it for a collapse. I was going to put on. At first, I thought about a Brooklyn butterfly. Instead, I thought of a call spread to kind of capture, or maybe a buy a put spread to capture this collapse from, here it was 24 down to this 17 is where it is now. That would have been a good move. It would have freaked me out here because this traded all the way up to 39.4 before it decided to correct. Let me do this on a chart so y'all can see it. Okay, so Dow Jones starting to come off of these highs. You can see on the 4-minute chart it's going to follow through on that. Where's my cursor going? NASDAQ, same thing. Coming off of the excuse me, coming off the highs. S&P, bingo. Russell, same thing. If this bar closes, which it will do in a minute and 15 seconds, that's a signal to go short. Which I think I will do. Full day on the 1-minute chart hasn't crossed below that 80 threshold. That makes me comfortable going short. Except it didn't close below that low. It closed just above it. This is why it's important to have multiple indicators. Now I have no doubt that I'm going to be right. I just don't like to ride losses until it turns around. I mean, nobody likes to see that. I like to minimize drawdowns as much as possible. Now, there's going to be some element of it turning against you, but right, I mean, look at how hard this rallied. It's 15 on 340, 15 on 330. Still have to close below that low, 15 on 49, 670. Yep. Before I do anything. Quite honestly, the better move probably to wait for this full D to come down here below the 20 and then go long. That would be the better move, at least with what I'm seeing in front of me right now. See how rapidly this is trading? This is crazy. And you wouldn't know it from looking at this chart because it's not updating. So the question I have to ask myself is, how much do I want to gamble I'm going to be right about this making a downturn? I mean, it will do it, but how high is it going to go against me before it does? How big of a loss am I going to have to dig myself out of? Which I don't like doing. Broke a cardinal rule, which is, I shouldn't say it's a cardinal rule. I just don't like doing reverses a lot. Because of the factor of, especially when it's a heat of the moment decision. A lot of times when I hit the reverse button is when it's at the top of the move and it goes against me, so now I've just compounded my losses. This is working in my favor right now. At least helping to erase some of this loss. Something to be said for staying too long in a trade. You're like a house guest. You don't want to outstay your welcome. And this is just incredibly rapid price movements. You know, this is high volume, high ATR, which is average true range. I'll show you the plot for that in a second. I'll get out of this trade. Okay. So, cut my losses by more than half. This is not for the faint of heart, that's for sure. So average true range is helpful for over a given time frame. So if your preference is to trade the 15-minute chart or the 1-minute chart, whatever your preference is, ATR is going to help you determine, one thing it's going to do is it's going to help you determine how much volatility there is, like how much price swings. You know, you need to trade, you need big price swings. If you have these really compressed price swings, it's difficult to trade without feeling like you're watching paint dry. It's also helpful for calculating your stops. If you do, you know, some traders will tell you, I calculate my stops as 3 times the average true range. I don't know, that is kind of arbitrary. I would much rather take a look at a chart and say, all right, it's above this MA, this 81 period MA. So I'm going to go long here when it closes above that 81 period MA, and I'm going to stay in that unless it closes below it. If it comes back against me and closes below it, that's my indicator that I was wrong. Okay. Now, one of the dangers of doing that is you don't know how far. In other words, if you're waiting for it to close below that, you don't know where it's going to close. It could close here, or it could close here. That's a big difference. What you could do is just say, okay, if it trades back through the MA, it doesn't close below it. If it trades back through the MA, and maybe it goes a half back on this bar here, okay, that's my signal that I'm wrong and I want to get out. That's a definable risk. That's a definable amount of risk. ATR is still helpful, though, for determining if volatility is increasing. And it kind of coincides with these Bollinger Bands. And I'm going to show you what I'm talking about, and chances are the chart's going to probably prove me wrong, but I'll take a shot. I'll take a risk. I like to trade when Bollinger Bands have become compressed and they show an indication that they're widening. The move is going to go in the direction of, is going to continue in the direction it's going. All right, it's basically pushing, pulling, however you want to take a look at it, that band down. When that starts to happen, that's usually a good time to indicate. Now, how else could you do that? You could also do that when the ATR starts to increase, and you can see that here the ATR is a little bit elevated because the Bollinger Band has widened. As the bands narrow, so in other words, price swings, the amplitude of those price swings is becoming compressed. The Bollinger Bands are coming in, and the ATR is decreasing. And it coincides, this kind of moves sideways, it bounces around a little bit. Once that ATR starts to increase, and you might say, look, once this ATR goes above 4, I'm going to trade it. So I'll put an alert in. And this is, I'll show you, I'm going to do an alert the way your software does it. If you have that capability, may be different. But I can actually pick a study. So I can tell it on the 15-minute chart, when this symbol, RTY, when the plot crosses above 4, to alert me. Okay, so what that would have done is an alert would have popped up for me telling me, hey, ATR is above 4. Now, that calls my attention to this chart. And I watch this chart and I figure out what I think it's going to do. I may have said instead, maybe alert me when it's at 5, goes above 5. Because you can see here, picking 4 would have been kind of a head fake. It would have, oh, looks like it's gone up, it's pushing that Bollinger Band up, but then it bounces off of that and it falls down. So I wouldn't want to use this indicator in a vacuum. I mean, this indicator is telling me, hey, ATR is widening, the Bollinger Bands are widening, this is a tradable opportunity. That would have occurred at 8 a.m. on Monday. I'm going to use that in conjunction with my stochastic here. So 8 a.m. on Monday would have been here. So what this would be telling me is, all right, I don't want to initiate a trade because we're kind of in the midpoint of the move upward. So I'm going to compare it to what my other time frames are telling me. Let's make this easier. Did I just skip it? Never mind. All right, where did that go? Oh, wrong drawing set. Hold on. So this is when this red line represents when I would have gotten that alert. I would have gotten that alert on the 1 minute chart kind of at the top of the move, the 4 minute chart at the top of the move, the 15-minute chart at the top of the move, the 1 hour chart heading that direction. So this move didn't really start in earnest until we got this crossover here. I'll make it green. And that would have been about here. Right? Which would have been at the bottom. Stochastics are bottoming out. But once I see this crossover, it's a signal for me oftentimes to get short. All I was doing there was kind of illustrating the importance of using multiple indicators. Sometimes it's an indicator that calls your attention to a trade, and then you have another one that's a confirmation indicator. So for me it might be, or for you it might be, if you use stochastics, like, okay, here we go. We're crossing below, or the stochastics are showing a down, you know, this move down. So I'm going to initiate a long position or short position if it crosses these two moving averages. This is my 243. This is my 3. Oh no, it's my 9. Okay. Once the price action crosses below and closes below those, then I will make that trade. Because right now these two are kind of, I mean, these are out of sync. Full K's bottomed out here. Full D's headed that direction. I'm going to know in about 4 seconds if we get this crossover confirming. Which it just did. I don't generally use ATR. And maybe when I start using. Wow. Dow Jones in the cash market is now basically flat. It was literally just now looking at it was a 0. Index is down 16 basis points. Composite's down 15 basis points. The S&P is down 6 basis points. Or it's not down, up. They're coming in. The Russell's down 33 basis points, or up. Yeah, Tim, have more coffee. Up 34 basis points. The VIX is coming in. It's down 10%. And this spread between the futures and the cash markets is widening again. So the question is, are the futures going to pull the cash markets up, or are the cash markets going to pull the futures down? Where is sentiment? Why is sentiment so vastly different? Part of it is that the futures are telling you that the market believes, the conventional wisdom, or however you want to put it, is that we're going to come out of this correction and trade higher. Corrections are good. They're healthy for markets. They shake people out of a sense of complacency. They get some of the weaker players out of the markets. As those markets trade down and hit stops and get people out, that's leaving some inventory that fresh buyers can come in. That's how markets move higher. Sometimes they have to go down. When they've gone down enough, they generate fresh interest. That fresh interest comes again, assuming that the fundamentals are there to support more buying than selling, and markets rally back up above where they were before the correction happened. You see this played out week in, week out, month in, month out. So I'm just waiting for my moment. Because on this 15-minute chart, we're below this 3-period MA. Or that's an 81-period MA. Moving towards this 3-period MA. Breaks through, tells me it's going to come down to about here. Russell futures are up 2.25%. Russell cash market, a flat. It was down 1 basis point. It was up. Now it's up 5. Now it's up 8 basis points. Even though we have pronounced moves, still makes these markets difficult to trade. Because even pronounced moves with momentum to the upside, for example, have retracements. Something moving strongly to the upside or the downside is good because it helps pick your spot. But it also means that if ATR is widening, which it's done, that you're going to short term be looking at bigger paper losses than you're used to, because that trade, unless you pick perfect trade location, which is very hard to do, you have to give that trade time to season. You have to give it time to turn in your favor. But at the same time, you have to be honest with yourself and and this is how much risk I can tolerate, or this is how much losses I can stomach, and I know that I'm wrong. Like if I think initiate a short position if it closes below the 3-period MA, I do that when it closes below 3-period MA. It crosses back above, and it's, let's say, 5 ticks above, this pivot point here. That signals I was wrong. It's time to get out. Have that discipline to have those stops in place. Whether those are stops that you eyeball or you actually put the stop orders in. Problem with putting stop orders in is, and there's a lot of controversy about this, sometimes bigger traders who basically are trying to bully the market will try to push the market down to clear out stops so they can buy in and watch a rally. Again, not everybody agrees with this. That some people will dispute that doesn't really happen. That's just market movement. Okay, I mean, it could be, it could not be. The point is, a lot of times when you have stops out there, you get stopped out, and then it rips hard against you. Be prepared for that, and how do you avoid it? So with things having come in, Autodesk is only down against me $78. It was down like 300 plus. Apple is only against me 21 bucks. Kohl's was up 100 bucks. It's down. Now it's only up 40. Win, that's helping. That's up 100 bucks. I've heard this sell-off described as orderly. I don't know if I agree with that. I guess it's a matter of opinion. It was an opinion that was formulated based on a very limited number of days of price action. This does not feel orderly to me. From a short-term perspective, it seems the bulls are having their way, but they've not been able to keep cash markets in the green. They've not been able to keep the futures even remotely close to their highs. On the other hand, the Dow was down 800 points. The Dow futures were down 800 points at one time during the night. So they managed to at least reverse that. Now VIX is back up. You know, VIX was down. It was down 20%. Now it's up 5.6. So that tells me keep an eye on things, because this rebound may be nothing more than a head fake. It may be short-term traders getting in too early because they smell a rebound. But when it doesn't go their way, they liquidate because they either got in too high or they got in at a good spot, but they're just looking to take quick profits. I don't think that we've necessarily seen any panic buying or selling today. This is a good sign that this bar closed below the low of the high bar here. This bar I'm pointing to set a recent high. It wasn't able to sustain that, so it's this inverted hammer formation. A lot of times that signals a reversal atop of a move. That's what it's looking like here. This is kind of an exhaustion indicator, because this bar closed, this bar immediately opened, traded up, couldn't sustain it, pulled almost all the way back before closing and moving on to the next bar. The next bar continued that downward momentum until it closed. It closed below the low of this hammer here. Now it's kind of, the downside momentum is slowing down. Part of the reason for that is if I look at this 1 minute chart here, we're in oversold territory. This is going to rebound up. Once it's up here and it shows me signs it's going to pull back down, that's when I'm going to initiate my short. I'm not going to try to get perfect trade location. I'm just going to try to get better trade location than what I would get now. I don't want to watch this rip up to here. So right now, folks, I'm going to take a real quick break. I'm going to leave the camera on. I'll continue live casting. I'm just not going to be in frame. In fact, I'll point up at the ceiling to indicate that I'm away. But I will be right back. Alright, I'm back. Okay, let's make sure I'm in frame. So Russell futures, probably along with all the other futures, if I were to look at their charts, they would look the same. And we're in kind of a downdraft right now. Seeing slowing in the 15-minute chart, seeing slowing in the 1-hour chart. We're seeing a crossover of the full K below 80. We're witnessing here full D crossing over, having traded up into overbought territory, crossing down, following the full K down. Ideally, I want to wait till full K is above 80 on this 1-minute chart. Ideally. This afternoon, I'm probably going to take a look at VWO. It's the emerging markets. I keep calling it VWO. What it is it's a Vanguard. It's the emerging markets ETF. During most of the domestic recovery, emerging markets did not do well. In fact, when I first got into VWO a few years back, I was upside down on that position for the longest time. And I had shares of that ETF. Then I bought these 3 calls to supplement those shares, and that was what swung me to profitability. Sitting on a nice profit, open profit now. There's a difference of opinion on what emerging markets are going to do in 2018. If the dollar continues to strengthen, the thought is that that will be negative for emerging markets who, like Brazil, China, who export domestically to the US. They may also be exporting to Europe. So there's that factor. I didn't grab my coffee. I'll be right back. Gotta have my coffee. I gotta keep this trading mind going. I'm starting to see a lot more strength in the Russell futures. hoping that once this full K crosses into the 80, that'll give me the buying opportunity that I want. Unfortunately, that's what we're dealing with. Really, the reason I'm being so selective about my entry points is I don't want to overtrade. The commissions for trading futures are deceptively cheap. But believe me when I tell you it adds up without before you realize if you trade 20 contracts a day, that's 20 round trips, that's 40 individual trades. That might cost you $100, $110. If you made $400 in gross profit, 25% of that went towards paying the commission. I'd rather make $400 in one round trip trade than 20 round trip trades. Doesn't mean I always accomplish that, just that's the goal. Okay, so now my full K has traded or has migrated above this 80. I would like to see confirmation that these bars are decreasing, which means I'm going to have to wait a couple of minutes at least before I do anything. I might conceivably, when I get that point, open one contract, and if it continues to go in my favor, or if it looks like it's going to continue to go in my favor, initiate another contract when I get a crossover here. Confirmation that this is going below. Which that's one I gotta wait 15 minutes for. At least. Because it's a 15-minute bar. While we're waiting, Dow down 20. These are cash markets. Dow down quarter of a percent. NDX down 0.1%. Nasdaq Composite down 0.25%. S&P down 1/3%. Russell down 1/5. So 20 basis points. VIX is now down. Futures markets, Dow's up 1.25%. Nasdaq is up 0.8%. S&P up 1%. Russell up 1.8. We just got the confirmation I wanted. Now we just hang on and hope for the best. See, well, got a little bit of a head fake. Trading up to this 81 period MA and then kind of backing off. Yeah, that was too early of a move in. I don't believe I'm wrong yet. Where I might be wrong is if it trades above this high point here. Which it just did. Histogram's narrowing as full D approaches this 80 threshold. It gets ready to cross above. Momentum to the upside was slowing, was reversing. Now we're seeing full K crossover. This may be a spot where I want to add a contract as a short. I'm going to want confirmation. I'm going to want to see that bar complete, which it will do in 30 seconds. Looking at this chart, I have all this space here, just blue sky, because it's below us, blue ocean. I don't know what you want to call it, but my point is, it's clear of any inhibitors and hindrances, moving averages, what have you. It has to blow through. Now, in this 15 minutes, a different story. So we just got confirmation. Let's add a short to it. Oops. I have got to stop doing that. I don't know how I developed that bad habit. I keep hitting flatten. I want to see what it does when it hits this spot here. Okay, that's a good sign. I think I've talked about when you can do, one cancels the other trades. And this was born of the idea, I got tired of putting limit orders in, like putting a target in, waiting for the symbol to hit my target. Having it hit and not getting a fill and having it reverse. Because I either was, right to the tick or maybe it was a couple ticks below, I just didn't get a fill. So now I have what I call a pincher, which is basically just a limit order with a trailing stop on the other side of it. So that if I want to, so if my profit target's 1482, so I go ahead and put my buy order in. And it happened so quickly I didn't get a chance to see it. But so it puts the limit order in here, but then it also creates a contingent, or I don't know what word to use, but puts in a limit order, but then it also puts in a stop on the other side of it, 4 ticks above the market, in the case where I'm trying to get out of a short position, so that if it hits my target of 1482, it gets me out. If it hits but doesn't fill, and it rips against me, it hits that trailing stop and gets me out. Now yeah, I give up 4 ticks, okay, but when I'm already sitting on, what, 40 ticks of profit, I'll give up 4 ticks to get out. Nothing sucks more than sitting on 40 ticks of profit, and where you chose to take your profits, you were right about it. You just didn't get the fill, and now it rips against you, and you close out, and now I'm sitting on 10 bucks of profit, like not even enough to cover the cost of commissions, right? Not a good feeling. It's preferable to be right and profit from it. It's not so great to be right and not be able to profit from it. You didn't get value for your trade. It's like if you're a poker player having pocket aces and you didn't want to go all in because you don't want to scare anybody off. So you kind of slow bet, but you're not able to, your head's up against a very timid player. You raise what you think is a modest amount, and he folds, and you get a small pot versus a big pot. That's kind of a lot of similarities between poker and trading. I think trading is largely about finding setups that have a high degree of profitability of moving in your favor. It's about calculating risk to reward. How much money are you willing to risk to get a certain reward? Being prepared to sacrifice that risk. Like, this is money that if I lose it, I'm okay because I still have the rest of my bankroll. I didn't bet my whole bankroll on pocket aces, Now, ignore tournament poker. Tournament poker, because the blinds structure encourages you to go all in early because you have to accumulate a big pot before those blinds start increasing. And next thing you know, like, you've got a bankroll, but you're at a level now where the big blind, like, that's your whole bankroll. And you get 210 in the hole, that's not, the odds of that winning a pot for you are pretty slim. Thinking out loud here, not only are the futures signaling a potential rebound on the indices, so the Dow, the NASDAQ, the S&P, the Russell, the VIX is signaling something like that as well. I mean, it's down. The VIX futures are down 24%, so we're down to 25. What we would call the cash market, like the real-time market, like this is not, this is not a futures market. This is an index of cash markets, is down 1.2. That's it. But it's 36 70, so still elevated. Definitely off of the highs, and the highs were 50 in the overnight. So this is down 2.5% off of yesterday's close, or yesterday's settle in the VIX futures. I'm contemplating, even though Autodesk is positive delta, I'm contemplating keeping that around as a hedge. There's other ways to hedge, but I mean, why incur more commissions to liquidate? For example, liquidate Autodesk and then buy NASDAQ calls. It's worked for me so far. Sorry for the silence there. I was just contemplating why this stream seems to be so delayed. Taking a look at the futures indices, so starting with the Russell, showing some definite weakness now. With the way that this is setting up, I would anticipate a rotation down. Not a science to this, but down to 1465. Don't want to go off of this Fibonacci because this Fibonacci was drawn long enough ago that I don't trust it. Seeing some choppiness here on the 4-minute and the 1-minute. The bulls don't want to give up. but they seem to be losing right now. Sometimes it helps to visualize. If you've heard of visualization exercises, like visualize yourself being successful, sometimes it helps if you visualize the market doing something. Like, you know, we talk about bulls and bears. If you literally, like for me, if I visualize this battle going on, this struggle, then it helps me really internalize what these indicators are telling me. You know, if I look at this 1 hour or this 15-minute, what this is telling me is the bulls are getting tired. They're losing steam. If this were a literal fight, okay, or if it were a football game, the defense is getting tired. Sometimes it gets a second wind. You'll see a bounce off of the zero line. That's uncommon. Just be prepared for it when it does happen, because it will happen to you. It's happened to me. The midpoint is 5. That wasn't enough to raise the midpoint to 10. By the way, chances are you're probably, if you're watching this, you're probably watching an archive of it. If you have questions, feel free to comment. Leave your questions as a comment. The description of my channel also has my Twitter, so you can send me a direct message on Twitter. It would be interesting, or I think I would enjoy having some questions to answer during a trading day. Not just to answer them, but to have a chart up with an actual tradable opportunity, whatever the question may be, to really illustrate that point. In 15 minutes, it will be 11:30 East Coast time. That's the start of lunch. Kind of why I think this action is slowing down. What's interesting is how, as I scroll through here, like this is a very elongated. If I show the TPO profile, there's two profiles, volume profile which shows today the volume at which RTY traded at different price levels. Okay. Generally speaking, you want to see a nice bell curve shape. When you don't, when it's kind of crowded here at the top, that's a bearish signal, because what that tells me is to get to that bell-shaped curve today or tomorrow, so that those two, if they were to composite those two, they would look like a bell curve to fill in this volume. All right. Yesterday's volume, this is today's volume. Yesterday's volume was the same way. Crowded at the top. A lot of volume occurred here. Less volume occurred as it was moving down. Now, don't let that fool you, because if you overlay volume like yesterday, volume was increasing on down moves and was decreasing on up moves. That's not a good sign. That's a bearish sign. Now, if I look at, and the point of control, which is the volume at which, or the price level at which most of the volume traded, was here at this 1487.50 level. You'll see that that is also a pivot point. So trading around this, that's a key level. It spent most of its time today below the point of control, below the pivot point. Take note of that. If I switch from a volume profile to a TPO profile, time is more of that bell curve shape. Yesterday, the TPO profile is heavily skewed up here. So what that tells me is that RTY is making an effort to trade up to fill in. Let's see if I can composite these 2 days. No. Well, I can actually by just picking the week. Compositing these 2 days looks a little less skewed. If we were to look at this by the end of the week, I would guess that there's a strong possibility that this will be more of a bell curve shape. It could rotate down by the end of the week. Right now, it's trying to push this part of the bell curve up. The only way that's going to do that is by spending more time here and less time at either extreme. just a theory. So this is today's profile, or this week's rather. Last week's was a little bit more evenly distributed, a little bit more of a bell curve shape. Week prior to that, it's even closer. So I don't know if this is almost like complacency. I don't know how else to put it. Like the market got so comfortable moving up that it was making these orderly. And earlier I was saying that somebody was describing this sell-off as orderly. I don't agree that it's orderly. It seemed to me like it was very choppy. I didn't see bulls necessarily capitulating. I don't see them capitulating today. There was a lot of capitulation yesterday. But if this sell-off is to continue, and I think that it will, the bulls are not going gracefully. The market, where I was going with this is the market has gotten so used to this melt up that we're seeing these orderly distributions on a time profile. Once the sell-off really began in earnest, which was, I mean, yesterday was vicious. You know, the tail end of last week is where it started. This bunching up here is almost like the bulls not acknowledging that there's all this downward momentum. There's a lot of time spent up here, a lot of time spent defending at this level. Point of control here, moves up, value builds, moves up here, point of control here, value barely builds up, right? Now building down again. So the question is, what force is there that's going to cause this to reverse? What outside force is going to act on it, if any? I don't know if I've said this before. Technicals can be relied upon until some outside force acts on your underlying security and messes it all up. You see how this value has built up just so gradually? And this is so steep. as the week progresses, I think we're going to continue to go down. But I think that this is going to, we'll be able to draw something that will look more like that, whoops, over time. All right, don't cooperate. That's just me thinking out loud. Yep. So this bar is going to close in 43 seconds. Thus confirming from the perspective of this chart that we're going to continue to go down. Everything's in line. Decline in the histogram here, decline in the histogram and the crossover here. That tells me that for the remainder of the day, I think it's safe to consider continuing to short this market, assuming that I do so not at the bottom of moves. You know, there's a thing called Elliott wave theory. I don't trade on it. I probably could. I do believe that the market moves in waves like this. I do believe that the markets spend about 80% of their time moving sideways. And the other 20% actually making big moves. That's why sometimes trading can feel so boring. Everyone you get into trading, it's like, oh, it's glamorous. I'm a day trader. You know, I'm making tons of money. It's exciting, and it can be. I mean, don't get me wrong. But I think if you're doing it right, sometimes you're going to be bored. More often than you want to be. If you're a stimulus junkie, you're going to want to get that in check. You know, if you're the kind of person, if you play poker, if you're the kind of person that bets because you have to be in a hand, you know, you're gonna want to come to grips with that because that's gonna get you in trouble. It's gotten me in trouble in the past. See, and look at this. I may have missed it. I may be too late. Oh well, there'll be other opportunities. Okay, well, it's 9:32 now. So it's 11:32 on the East Coast. So I'm going to go ahead and do the break thing. I'll be back here in 2 hours, so that's going to be 1:30 at the end of lunch on the East Coast, and we'll spend the rest of the trading day together. All right, enjoy your lunch or breakfast or snack, whatever it is for you, and we'll see you soon.